from our viewers. Keep those coming. We are live on air and on social media as well. Please allow us to get into a Take Note conversation this morning. And so during the week of October 21st to 25th of 2019, stakeholders across the globe organize and participate in conversations exploring the most important steps to achieve full financial inclusion, a state in which everyone who can use them has access to a full suite of quality financial services provided at affordable prices in a convenient manner with respect and dignity. Within this vision, financial services are delivered by a range of providers in a stable, competitive market to financially pretty much capable clients. So meanwhile, financial institutions and fintechs are aiming to profitably serve low-income markets. And so in the face of these trends, we cannot help but ask, what is financial inclusion? What is it for? And what role do financial technology companies have to play in financial inclusion? So joining us to have that conversation and to just break it down, I'm joined by the Executive Director of the Financial Sector Deepening Uganda, Ms. Rashmi Pillai. Thank you so much for making time.
Thank you for having me.
You're welcome. And also I do have the General Manager of InterSwitch and a Chairman of the Finitech Association, Mr. Peter Kawomi. Thank you so much for making time.
A very good morning, and thank you for having me.
You're welcome. Good morning. I think let's just start from the basics. You know, we throw this term around, but not everyone does understand this.
Right.
Rashmi, I think I can start with you.
Sure.
What is financial inclusion?
That's a great question. So for several years and decades, financial inclusion has been defined as access to financial services and products. And the success has been measured as number of people who've had bank accounts or mobile money accounts, a number of people who've had credit and savings, etc. But increasingly, we are rethinking the definition of financial inclusion. The question is financial inclusion for what, which you just asked. And if financial inclusion is not enabling people and businesses to grow, to increase their take-home incomes, then is it true financial inclusion? But that is not to say that Uganda has not made a lot of success. Uganda in the East African region is one of the countries that has made a big stride in reducing financial exclusion. We halved the number of financially excluded adults in the country in just a span of 12 years. So yes, some food for thought for all of us.
Right. Mr. Peter, you know, you are a guru in the fintech space. And it's not just here in the country, but I think globally, fintechs are now waking up to realize that, hey, the market is not for the well-to-do in society. The market is in the numbers, them that we call low-income earners, so to speak, and making sure that they're not left behind. And I think the math does play out for you guys. So let us in on what fintechs are actually doing to ensure that financial inclusion is a reality for all.
Thank you very much, Myla. You know, a few years ago, you know, when you wanted to pay your school fees, when you wanted to pay utility bills, you had to go to the bank because you had to go get cash out from across from the teller. You had to go make that payment in cash. Now, over the years, even here in Uganda, we have seen it change quite gradually. In the early 2000s, we saw ATMs come on board. Then we saw things like mobile money come. Then we saw very many apps, and today nearly every bank has an app or some sort of shortcode, etc., to access mobile banking. Similarly, many banks also have internet banking and the like.
Correct.
Most recently, we have also seen quite a variety of banks roll out things like agency banking that allows you to access your funds that sit in your bank account from almost anywhere across the country. Now, these things are being enabled by companies called financial technology or fintech service providers. And the reality is, if you want to drive financial inclusion, if you want to ensure more people have access to formal financial services, then you have to address the problems that they have, which is convenience, which is cost, and which is ease of understanding. Now, financial technology service providers are really addressing that by providing the convenience, for example, accessing your account or your service through a mobile phone, by providing the ease of understanding, because we are translating many of these services into local languages, and by providing the affordability, because we don't have branches and we don't have things of that nature that make it quite expensive to access financial services. What this means is that more people For example, everyone that has a mobile phone can access some sort of financial service today,
Correct.
even here in Uganda.
Right.
Everyone that is that is near enough to a shop can access agent banking services,
Right.
etc.
And you know, it's amazing that you said that, because convenience, ease of understanding,
Correct.
and also affordability is critical. And we've seen fintechs coming through. The space is quite competitive now,
It is.
and a majority are playing on the card of affordability, saying that, hey, you can transact free of charge, no extra costs and stuff like that. So I think I'll come back to you on the profitability of fintechs, especially with that lingo of, hey, everything is free of charge. Is it really free of charge?
Sure thing.
So Rashmi, let's get into this conversation, especially when we're looking at the most afflicted in society,
Right.
women and the young people.
Right.
Unemployment rates are still up there. We're looking
Yep.
at 60–70% right here in the country. When we look at women and financial inclusion and them saying that, hey, we're trying to do something by ourselves, but when
Yeah.
we go to try and access affordable credit, what are you asked for? Collateral. And only 30% of the African women own land.
Yeah.
So what more can be done to make sure that these barriers are actually broken and
Right.
women and the youth alike do have an equal playing field with the male counterparts?
Yeah, no, this is a great question. So let's speak to women and how legacy forms of credit has been accessed. You said collateral, banks understand collateral, that's what they lend against. But that does not mean that you should exclude women and youth who have a big role to play in economic transformation, right? So at FSD Uganda, one of the things that we have supported is moving away from, what are the innovations we can put in place to move away from immovable collateral like land. We supported the URSB to set up an electronic movable collateral, because people have movable collateral. They have automobiles, they have oxen, and they have cattle, and you can get credit against that. How do you build business models against something like this? That was one. The other thing was, as fintechs in Uganda, most of the fintechs, like nearly 60%, are payment fintechs.
Mm-hmm.
The advantage of that is you will be able to see my income and my expenditure. So it's, if in cash, you cannot see that. You don't know how much Rashmi earns and how much Rashmi spends.
Right.
And using that transaction data, we are trying out to see, well, how do we assess Rashmi's risk? And maybe all of this transaction data can help build a credit score, and you can lend against that. So these are some of the models that we're working with both banks and fintechs that Peter here represents, to test some of these models, so that people who have great ideas are not handicapped
Right.
by a legacy business model.
Right. And you know, what you're saying is critical, because I'm also in business, and the majority say that the reason as to why businesses fail, especially startups, is because they don't track their expenditures. And at least thanks to fintech, once you pay your services on the e-platform, or you receive payment of services on the e-platform, you can be able to track how your money is moving, which is critical, because then you're accountable. Let's go to the profitability of fintechs, especially now that we know that the big conversation is on innovation. We do have ICT hubs, innovation hubs coming through. I've been able to interact with quite a few, a majority saying that, hey, the fintech space still has, potential to grow, more innovation to come into play. And so my question to you is, especially for that young person watching us today, saying that maybe they're trying to develop a prototype or an idea in that field, and the lingo that is going on is transact for zero fees, or most of the transactions are actually free of charge. Let's look at the profitability of this particular space. Is it really free, number one, and how do fintech companies earn their money or gain their profit?
That's a great question. But before I get to that, allow me to just address something you said. It's great to hear that you're in business and you understand the strength of what platforms can do.
Right.
Because the reality is, if on a day-to-day basis, you have a platform that allows you to control your stock, that allows you to manage your sales, etc., it's actually immediately giving you value for the business.
Correct.
Now, with things like that, as Rashmi says, with things like that, banks and other lenders can actually learn how your business works. And when they know how your business works, they can then start lending to you, and you can see your business grow.
Correct.
Now, it's models of that nature that allow fintech companies to actually think of alternative business models. We don't necessarily always have to look at either a subscription or you must pay for a certain service. There are other ways that we are thinking about, okay, how can we deliver value to businesses, to individuals, and extract some sort of, for example, in this case, data that will allow us to grow. I mean, there are great examples in Africa of that show the profitability of the sector. Just last year, Forbes reported that over $350 million was invested in the fintech space in Africa.
Correct.
Okay. A huge chunk of that was even here in East Africa. Okay. Already this year, 3 quarters in, we have seen that number surpassed. We expect that it's going to cross 500 this year. And these are part of some of the things that we're saying, okay, a lot of interest is in this sector because it's profitable, it's going to grow for the next few years, and we see it delivering value for businesses and individuals.
That is totally, undebatable.
Yes.
The value is there, and we can all see it. I don't think there's any lot of business people who love, handling cash nowadays. We're all on the e-space. But I just wanted to speak to, because this bracket is watched by quite a number of people who are entrepreneurs, innovators, and stuff like that. How do fintechs make their money? The value is there, undeniably, but what's the business model for fintech companies?
So I've addressed one opportunity.
Yes,
So
the investment.
like the data. No, the data.
Yes.
The data. Very many startups that you spoke about earlier rely on people like FSDU and others to really help them start. Okay, and many times those ones don't really understand what business model they will take in the long term. However, one thing that I must stress is when they say free, it must mean free. and I say this because we have to protect our consumers.
Right.
We have to make sure that we are not mis-selling to them, okay? And I trust that any member of the FinTech Association that says a service is free is saying it is actually delivering it for free.
No hidden costs.
No hidden costs.
Yes, Rashmi.
So allow me to play the devil's advocate a little bit over here, right? When we talk about technology-powered platforms like fintechs are, it takes a certain volume of consumers to actually reach, reach that scale on which you can start generating business models. Because it's not the day you start may not be the day you start making money.
Right.
For such type of businesses, it's a long runway to get money. So let's take a Facebook, for example. For several years, they were just burning cash. Uber today still is not profitable. It's an entirely technology-led platform.
Right.
So are a couple of other companies that are entirely technology-led. The business model and how do you create value for consumers and what you can charge for sometimes comes later along the way, because as Peter said, you see how people behave on your platform. You see what they value more than others and then decide how to charge them.
Yeah, I think all of them now do understand. Once you get into that space, it's not, quick returns.
It's not quick
It
returns.
takes time,
Yes.
because I think it's a gamble pretty much, but banking on the value, and I think the track record as well, like you're saying, integrity is key. Once you say a service is free, it ought to be free
must be free,
indeed.
yes.
All right. Peter, I think I'll hold you to this one as well. When you're talking about fintechs, there's always a conversation with regards. It has amazing value, amazing value. But anything that creates value also does have a risk to it. A majority have been shunning away from, online banking, downloading apps. We know that hackers are always on your radar as fintechs. You have one innovation, they find a way of cracking it up. And so a majority of your consumers or customers are always skeptical. I'll tell you, I'm one of those. I think I just warmed up to, online banking or this, application in terms of my transactions just the other day after, quite a number of convincing that was done by different, stakeholders in my business. And so that aspect of security, how safe is our money in this particular field?
I'd like to say two things to that. On one hand, we have a responsibility to keep our systems secure. Okay. Now, there are very many standards globally that we can adopt. One of them is the payment card industry standard. And what that allows us to do is to make sure that we are delivering services in a secure manner. But even more importantly is we must educate our consumers, okay? Now everybody has a role in that. Yes, development partners like FSDU have been doing a lot of work. The central bank over the last few years has been doing a lot of work on financial literacy.
Right.
We as financial technology service providers also have to teach our consumers about the risks they're facing when they're online or using mobile payment services, but also how to use them in a very secure manner. We have a lot of work to do, especially since we're in a region where not everybody will really understand some of these technologies very quickly.
Correct.
And technology is changing a lot every single day.
Right.
We are adopting new standards, we're adopting new technologies. So we have a responsibility to make sure that we're doing it safely,
Right.
but we're also educating our consumers.
All right, and of course, I'll get back to you for you to give us top of mind, safety precautions that we need to, employ whenever we are transacting on these particular spaces.
Okay.
Rashmi, he talked about information gap, and not everyone understands this field. And we know that nowadays business is not about you just opening up shop, having a physical shop and being comfortable at that. There's e-commerce, and e-commerce pretty much nowadays, thrives on fintech, capabilities and spaces and platforms. Talk to us about that information gap and what financial sector deepening is doing to make sure that that is breached, especially for the women. They always attack us and tell us that we never warm up to technology-driven conversations. But what are you doing to make sure that that information barrier is sorted out or breached?
So there are two sides to this story. So when you talk about information gap and you say women are not warming up, allow me to disagree. If you see a large percentage of women with small businesses, right from the dresses to baked goods to shoes, sandals, they're all on Instagram and Facebook. That is technology. You are selling your goods and services. What you may not be very comfortable with is now can you migrate even your very tight financial resources onto technology because you have understood cash, you know how to control that, whereas now you're entrusting a third party with something that you otherwise, it's not tangible like cash. That requires a lot of public and private sector trust building, awareness generation, and saying, why is this better than cash? How can you multiply your business using this data, using this information? So it is the collective effort of the private sector, public and development partners like us to build that trust. And let me give you an example of Kenya. So there are companies in Kenya that have used the transaction data of small businesses and said, if you pay via Lipa na M-Pesa in Kenya, and we see that your monthly transaction, sales is around $1,000 for a couple of months, so we know that's regular income, we'll give you up to 30% of that as additional credit so you can expand your inventory. So once they start seeing the value, there will be a hook and an incentive to do it. Right now, if you don't have a real, genuine reason, you will not do it.
Right.
The second is, how are you building that trust? What is the recourse if something goes wrong? That is what people are afraid. People are not necessarily afraid of technology. They're like, if something goes wrong, who can I call? Who can help me? And I think that's a very tangible reason that we should, as regulators, development partners, and private sector says, private sector can say, if these are the things that happen with my product, FAQ, this is what you can do. The regulator can set standards and say that this is what consumer protection looks like, and we will hold you accountable to it. And the development sector can help both of these actors in educating the masses.
Right. Trust issues do come to the fore. Women are known to be very cautious, especially when it comes to the hard-earned money and new ideas. We have to really see that indeed we can trust certain platforms. Let's talk about that. She mentioned something, and I think it's the conversation that comes through whenever I interact with women. They say that if something goes wrong, and ideally some things go wrong, people have their accounts hacked into and stuff like that, and they lose money. How assured are we as consumers that if such happenings do happen, then we can rely on you to help us out in that crisis state? Fintechs.
So Mala, the reality is it's not just women. Everybody really cares about their money. And everybody, once they face a challenge, for example, getting hacked, will back off and may not use that system again, okay? We have a responsibility, as I've already mentioned, to make sure that those systems are safe. However, consumers also have a responsibility. Now, depending on the instrument you're using, depending on the platform you're using, the safety techniques are different. For example, if you're using the ATM, you will usually put in your PIN to withdraw cash.
Correct.
Now, at almost every ATM in the country, you're actually, there's a display for do not show your PIN to anyone, make sure you're taking proper security precautions, follow that. If you're shopping online and you have to put in your card number, make sure you're not exposing your card. Make sure the website is secure.
Okay.
Make sure you educate yourself about how to make sure you are safe in whatever that you're doing, okay? Having said that, the fintech space in Uganda isn't yet as regulated as it should be, okay? So today we have the national payments law that we're waiting for and regulations that we're waiting for. We believe that working with the Bank of Uganda, we will support the entire community to become more safe and to support the consumers to trust the system.
All right.
Yeah.
But as we wrap this up, should the fintech companies take the obligation once maybe the customer's account is hacked into? Should they take the obligation of perhaps refunding that money?
Absolutely.
How should it work?
Depending on the situation, absolutely.
Okay,
Yeah.
all right. Thank you so much for coming through. But Rashmi, as we wrap this up, final question. 21st to the 25th of October globally, it's Financial Inclusion Week. But this is going to be a run-up to the Africa Fintech Festival that will happen from the 4th to the 6th of November. Tell us more about that in 1 minute. What is it that you want the viewers to actually know with regards to the same?
Every year, the world celebrates Financial Inclusion Week so that we can all come together and say what has worked, what has not, and what does the future look like. Those are the questions we like to answer. Uganda has made some strides. This week, we will be discussing what worked, what did not. All of this culminates in a 2-day event on November 5th and 6th at Kampala, Serena, where Uganda is the country that will host the Africa Fintech Festival, and how fintechs are driving economic growth, driving the digital economy. So the entire nation will hear on how fintechs cannot just make incremental progress, but help economies like Uganda make leapfrogging progress.
All right, okay. And can the public be part of the festival?
Can the public? There are tickets to the event, but it will be live on Facebook and other social media.
Okay,
Yeah.
all right. Tickets to the event at how much maybe?
At 250,000.
All right, okay.
250,000.
Where can we get the tickets?
So there's a website, africafintechfestival.org.
All right.
A lot of information is there. There's
Okay.
information about the speakers, etc.
Yeah.
Please feel free to visit
All
us.
right, okay. So you know where to get your tickets and where to get all the information from. Thank you so much for coming through. Ms. Rashmi Pillai, the ED of Financial Sector Deepening Uganda, and Mr. Peter, beg your pardon, Kawumi, the General Manager of InterSwitch and also the Chairman of Fintech Association. You now have all the answers with regards to financial inclusion and fintechs. Innovators, let's wake up. There's still some gap that has to be filled, and don't actually be left in that particular bandwagon. We always interact, so keep those questions coming on #morning@NTV. We're taking a short commercial break. We'll be getting to Mr. Stephen Bide. Actually, he's there with me. Stephen Bide, it did pour quite heavily this morning. How do the roads look like?